Hi and welcome back to Cheeky Crypto. Today guys, we're going to be diving down into the world of Bitcoin to take a look at what has been going on most recently with BTC, to see where we are likely to end with this weekly close candle, what that means for the slightly longer term picture. We'll also have a look at some Glassnode data as well and see what's going on there and if there's anything of concern. As we get into this video, if you do find it useful and informative, hit the like button, really do appreciate that. If you happen to be new to the channel, make sure you subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Right, with all that said, done, and out of the way, let's jump on down into the desktop and take a look at what is going on here with Bitcoin. Okay guys, so here we are with our weekly chart. Everyone who's a bit familiar with the channel will be familiar with this chart by this point. Basically, this is Bitstamp data on the weekly chart, Bitcoin to the USD. And basically, we're using Bitstamp because it basically has data all the way back to 2011, and we're able to dissect the various different bull runs, right? So for the main part, we're looking at 2013, 2017, obviously where we are now at 2021. Okay, we've analyzed the different time slots in between these things. In terms of 2013, from the bull run starting through to when we actually saw the first peak, the length of time for the second peak, the total duration of that bull run, etc. Then obviously we have a bear market that effectively lasted for 413 days, and then obviously we start the next bull run. Now peak to peak we have 1,470 days. That's the peak of Bitcoin back in 2013 through to the Bitcoin peak up in 2017. The bull run for 2017 was 714 days and saw a total of 5,400% in gains. So, not the best performer, but obviously still pretty well. Then we go into the current time frame. Now, if we were to actually align peak to peak from 2017 to maybe a peak of Bitcoin 2021, the 1,470 days would have brought us to the 20th of December. Obviously, that has been and gone, and Bitcoin, potentially could have peaked at $69,000, but it was to the penny on Binance exchange, and I don't think that's actually something that we're likely to see. And I think there's actually some more stuff to kind of come. But with that being said, we also have a few other things that we have to acknowledge. The 2017 bull run itself lasted, I think it was 714 days, and the bear market was 364 days. This is important to understand for a couple of reasons. One, the first thing that we have to acknowledge is the bear market in 2013 into 2014-15 was a 413-day run, right? So the 2018 bear market was actually shorter than the originating bear market that ran beforehand, right, as in the 2014 bear market. Now, the bull run for 2013 was actually shorter than the bull run of 2017. There's lots of different kind of things going on in the space of lots of theories of whether we have an extended cycle, whether there's actually any logical reason or rhythm or rhyme to this at all. At this point, I don't think there's enough data to really be conclusive about it. But what we do have so far, just taking a look at those couple of data points, is we have a bull run that's extending as bull runs continue, and bear markets that are shrinking as time continues. Okay, so again, those two things are opposite, but the time frame itself, if you think about it, balances out in line with Bitcoin's halving every 4 years, right? So interesting kind of to kind of break it down. That's kind of what this chart's about. Not really what this video is about, though. This video is all about what's happened recently. And if I actually throw on that Gaussian channel, we can see that we got that closed candle last week, right? So we closed inside the Gaussian channel. Now, for those who are unfamiliar, the last couple of bull runs we've closed inside the Gaussian channel has led into a bear market. And of course, it's a good 18 to 24 month period of time. Again, in 2014, we closed inside the Gaussian channel, bear market followed. So closing inside the Gaussian channel, obviously, is an area of concern. History tells us that that actually leads into a bear market. However, this particular cycle could actually put an end to that theory altogether. We have actually printed a green candle and are currently looking at closing above the Gaussian channel. Now, I am pre-recording this. It is currently 3 o'clock in the afternoon, which means we've got about 9 more hours of trading to see what actually happens to this candle. Are we actually likely to see the thing close above the Gaussian channel or not? There's a few things that we probably should acknowledge as to whether or not we are going to close inside the Gaussian channel or outside. Closing outside the Gaussian channel is something that hasn't happened before. in history we've closed inside consecutive weeks and basically go into bear market again. So if a closed candle does occur now and we are inside or outside the Gaussian channel, i.e. we're above the Gaussian channel, then actually that should be putting us in a pretty bullish situation, and it will also put a pin and, you know, completely debunk this whole theory about the Gaussian channel causing bear markets. We can still use it for value and things like that, but for now I think it's important that we acknowledge that we're not inside it. 9 hours left of trading. We could potentially close inside it, but let's actually review the data and see what that tells us first. So ultimately this weekly chart's very interesting, and I will always refer to it every week just to make sure that things are going in the way that we might want them to go, whether we are bullish or bearish at the time. But right now we are thinking about all-time highs for Bitcoin, and therefore we don't necessarily want to see consecutive week closing inside that Gaussian channel. So one to watch out for there. Now, we are going to jump over to our Binance data, because one of the main reasons that we are kind of bullish on Bitcoin at the moment is, you know, there's not really enough data points to be definitive about anything, right? And you might have people saying that we're in a bear market, or we're going to all-time highs, right? It's actually too soon to really truly say. And there's a couple of reasons for this. There's the market itself has positioned itself in a very strange or, you know, deliberate way, that we're either going to be setting up bull traps or bear traps, depending. And basically everything moves in waves, all right, or bounces, however you're going to want to look at it. I look at it as waves because I look at Elliott theory on this channel. Now, there's a couple of different things that we can kind of account for. Okay, and for that we kind of really have to kind of zoom out a little bit, and we have to understand that we hit an all-time high and then we saw a pullback. Okay, this pullback has a bouncing position, okay, somewhere that we actually bounce up to. Now this particular area that we will be bouncing up towards is going to be the 618, the 702, the 786. As I have highlighted them here, we have 58,000, we have 60,000, and we have 63,000. These are the three key areas. Getting a closed candle above the 786 on the on this Fibonacci retracement tool, sorry, but actually basically is a bull signal that takes us up much higher. We potentially could be going up for the 1.618 at 85k, for example, right? Now, obviously, there's a high probability that actually we get rejected from one of these 3 points. Obviously, the first area is going to be that 58.5k area. Getting rejected from there, a lot of people might actually think that this is going to lead to lower lows. That's not necessarily the case, but it's definitely one possibility. Likewise, if we got rejected from the 60,000 or just short of 61k, again, it could lead to people thinking that we are going to be going to lower lows. Again, it's possible, but it's not the only option. Again, coming up to that 786, again, you know, 63k potentially could see us come down into those lower lows. Again, it's an option, it's a possibility, but is it probable? And I'm going to go through a couple of things that are really interesting about Bitcoin. I've done this already, so if you're familiar, you'll know exactly what's coming, and that's going to be our wave counts, okay? For the most part, you're going to see people saying there's an A, this could be our B wave, and this could be our C wave down, i.e. lower lows, right? It's very possible, takes us into those lower areas. However, it's also important that we acknowledge that actually what we could be looking for here is something different, okay? And it's important that we kind of, you know, acknowledge the both different actions here, okay? We could be looking at an ABC move right in here, an A, B, and C. So actually this ABC is completed, and this is actually now a reversal, and we are looking to track to the upside. Okay, that could potentially lead to an A, a pullback at the same point that you would see this other wave C area, and then a reversal up to the next heights. Okay, so there's a couple of things going on here that it's not as clear cut as people might like to think, right? It's not as simple as we are bearish now or we are bullish now. What we're really waiting for is the bounce, okay? Everything bounces. So I'm going to quickly remove that off. And the main thing that we want to be focusing on right now is this bounce, okay? Markets don't just move in straight lines. They come down and they go up and then they come down again, or they come down and they continue to run up, okay? These are pretty basic things. Now, what you actually see if you look back at history is you pull back, you bounce up, you pull back further, right? That's kind of one scenario with an ABC down. Likewise, if we actually come over to a different point in time, you can see that we're rallying up here, okay? And if I grab hold of this, we rallied up, we bounced down, and then we rallied up higher. Okay, everything kind of bounces around a little bit. So right now, after this pullback, we are looking for the bounce. The bounce is going to take us to the 618, the 702, or the 786, and I am expecting rejection from there. The only question that we really have is whether or not this actually leads to lower lows or not, and we complete an ABC down at this point here. It's also possible that that does happen. Now, we do obviously have technically a 1 through 5 here, but I'm just going to draw it as a draw it as an ABC because it's a little bit simpler. And then obviously this can lead to an ABC up. Right here, A, B, and C. And therefore, we could be tracking that larger ABC down. It's very possible that we do actually see this happen. Okay, and again, this kind of dovetails into closing inside that Gaussian channel, right? Closing inside the Gaussian channel for 2 weeks could potentially lead us into those lower lows, right? We have to be aware of that. But also, it isn't in line with our expectation of bouncing up to these really obvious areas of the 618, the 702, the 786. Okay, so for now, it's too soon to say, you know, whether or not we are going to be going down to lower lows. We're not definitively going to know that until we actually cross some other thresholds, which will come after we've actually had this bounce. We're going to bounce from this area downwards, and basically if we cross a certain threshold on the way down, then we're going to be pretty certain that we're coming down into lower lows. Okay, and again, that would then align to the ABC count. If we're actually going to be tracking to the upside, the ABC or the B wave down is going to be very predictable. Okay, and therefore if we overextend on that going down, we go down to lower lows. Otherwise, we actually look for the reversal and the push up higher than our originating A wave. So again, a good push to the upside, but it'll take us a close candle above the 786, leading us into new all-time highs in the future. So as I was saying, it's too soon to really say. What we are looking for here, though, is a good push up to this area for a bounce. Once this actually comes in, we'll know definitively which direction we're likely to go, whether or not we're going to be calling it bearish or bullish, and obviously all that kind of good stuff. Now, the other thing that's really important to acknowledge why we think there's going to be a bounce, not only does it obviously resonate incredibly well with Fibonacci retracement tools and wave counts and Elliott theory and all that kind of stuff, we can also look at our stochastic RSI. It's heavily oversold on this weekly chart, so we are looking to push this up. And again, that would be in line with our expectations of these areas. And again, depending on how fast this thing rises will depend on whether or not we're going to use this as an indicator to say we're going down to lower lows, or whether we continue that run to the upside. Okay, so we have to be really objective about this. We don't want to be having our opinions kind of clouded by whether we think it's going up or going down. At the moment, the data isn't there, and I think one camp is going to get burnt one way or the other. Okay, and I think it's kind of been set up in such a way that kind of allows for that, to the point where if you're going long, you're potentially going to see that really really hurt you as we go down to lower lows. And likewise, if you're thinking it's going down to, I don't know, let's say 42k or whatever, and basically actually the market doesn't actually go down there and it pushes up, all those people who are going short are going to get burnt as well, which is often why we say don't use leverage. We would never use leverage, and we only buy and hold assets that we think have long-term value, etc. to them. Okay, so when we take a look at the stochastic RSI, we can take a look at all the various different times beforehand that we were in such a similar position. Now obviously we can be down here for quite some time. We can take a look at how long we'd actually been down in this low area for. It was several weeks, right? A couple of months. And this was basically that wave 4 low, by the way, where we are oversold. We then have this good run to the upside in this big ABC move, right? Big A, B, and C. Pretty standard stuff, and of course it takes us up into the overbought area. So the pullback was kind of due, right? Despite kind of various different news and things like that. That all leads to it, I guess, to a point. But here you could be looking for an ABC down, or the ABC could have already happened because we're already oversold. Okay, when we actually take a look and think about that motion to the downside, by the time we were actually moving down, we were actually kind of already in this area, right? We're already down in this really low area of oversold, and where we're not actually up as high as where we had been previously at the top of this wave 3, for example, where we were tracking at about 15.51 on that stochastic RSI. Right now we're actually at 6.6, meaning there isn't too much room to fall down before you reach absolute zero once again, which we had been at not too long ago. So a 1.51 was our lowest point actually on the 13th of December, and this is actually where you start to see the reversal and that green candle start to get printed. Okay, so really cool stuff kind of going on our weekly chart. Be very aware that the market here is very unclear. Okay, and we should be very open-minded as to which direction it's likely to go, and obviously be very aware of these key areas that we are moving up towards. We don't want to get too carried away, FOMO in, only to see the reversal, which I'm pretty confident we're going to see in either direction. Like, even if we are pushing up to new all-time highs, we're probably going to get rejected from these areas, and that's going to lead to people shorting the market and potentially getting burnt. If we are, of course, thinking about FOMOing in and all that, you're going to see long positions right at the point where we're actually going to see see a reversal anyway. So either both scenarios, we are likely to see a reversal at this point, whether we got ABC down or ABC up. This is going to be the potential turning point of a B wave, and that we want to be very aware of, right? So the other thing that I want to come down, I'm going to skip over the daily view for a second here, and we're actually going to really pay attention to this hourly view, because this hourly one is very choppy. Obviously, we've been analyzing all the various different moves that have been going on here with Bitcoin, and there is obviously this downward trend that's kind of formed, right? We had the impulsive move there. In fact, there were two of these impulsive moves up, continuation, impulsive move up again, and then the continuation. Now we're getting the breakdown. Okay, so we need to see that correction start to come in again. If we actually take a look at it from a daily perspective, if I bring this in a little bit here, you can see that actually we're tracking this ABC move up, okay, right in here, and this is just a B wave pullback that we're currently experiencing, and then we'll push back up again. Okay, so again, we are still on the direction of course, that 618, the 702, the 786 on the bigger weekly chart, right? But to get up there, we first of all have to pull back. Okay, so that's kind of what we're seeing in our daily, which is obviously what we're seeing in this choppy action of our hourly chart, right? So right now, this is potentially looking, very interesting. We're getting very short ABC moves up and bigger ABC downs. Okay, so for example, here we can see here's an A, a B, and a C wave down, and inside here you could argue that there's a lot of additional ABC counts, etc. Then we're tracking very minor, small kind of ABC moves up. So again, I'm expecting this kind of B wave correction to come in. We're expecting that pull back, and again, that's still a part of a bigger ABC move to the upside. So lots of choppy action here on our hourly chart. I don't want to get too focused in on that. We're heading up into the overbought area. So this is the dangerous part for getting that weekly close candle above the stochastic, above the Gaussian channel, sorry. And on that journey to the upside here, you can see we're starting to print this green candle. We're expecting a bit of a pullback. So I imagine that we're going to push up a little bit. We'll pull back and then we'll push up a little bit. This is where we basically get that closed candle above the Gaussian channel, completely debunking the theory about getting the closed candle in at the beginning, leading into a bear market, which is going to be fantastic to put that to bed one way or the other. So right now, this is actually looking pretty good. It all depends on whether this pullback is short and sharp, gets it over with, and then we continue that run to the upside. Okay, so that's kind of where we're tracking right now. And again, if you want to do multiple different counts, you can easily count this out here. There's an ABC move in here, ABC up, ABC down, and so forth, right? So really important that we kind of focus in on the bigger picture and to help us understand, but to save time, to keep the chart looking a little bit cleaner, we can draw it out like this. So ABC up, that will hopefully get us the close candle above the Gaussian channel, and again, we'll put a pin in that. So weekly chart looking good, daily chart looks good. Do expect the pullback though. Again, that's kind of what we're seeing here within our hourly chart. Again, looking pretty good, heading to overbought, looking for that pullback. Now, what about Glassnode data? Well, Glassnode data is interesting. Now, here we actually have a bit of a change on the balance of exchanges, right? So one of the charts, or one of my favorite charts, is to take a look at the Bitcoin balance on exchanges, right? This is all exchanges, and as of yesterday, this is actually increased, right? We had 2.5 million on there, okay? Again, this is quite volatile, still lower than where we were up here at the beginning of December. We had a bit of a pullback, and what's actually going on here, it's really interesting. You've got the gray line, or this white line just in the background. This is actually the price of BTC, and then obviously you have the balance on exchanges as your orange line. Now, what I really want to highlight here, guys, is as the price of Bitcoin pulls back, the amount on exchanges goes up. Okay, or the balance on exchanges goes up, and as the balance on exchanges goes down, the price of Bitcoin goes up. Okay, now what we have is the price of Bitcoin going down, and we also have the balance on exchanges kind of going down. Now the price of Bitcoin is moving up, the balance on exchanges is going up. This is illogical. It goes in the opposite direction as what you might expect. So I'm very cautious over that. And the other thing that's really important to change, or to have a look at, is the net change position. Okay, so rather than looking at it from a graph point of view, here we can actually have a look at the bars. What is the net position change on exchanges? Okay, and so as the price of Bitcoin pulled back in May, for example, the amount on exchanges was dramatically increasing, as in there was more Bitcoin on the exchanges, right? And then obviously as the price basically started to recover and go back up again, the amount on exchanges decreased, and you see the red bars. Okay, so as price goes up, you would expect to see these red bars on this particular graph, and as the price comes down, you would expect to see green bars on the chart, right? But that's not what you're seeing. Okay, you're seeing something very strange go on here. Okay, because as the price of Bitcoin goes up, we've actually started to see green bars on our chart, right? And this is basically starting out in October. So basically, more Bitcoin was on exchanges as the price was pushing up, which was very odd. This basically led me to believe that what we were actually seeing was a nice steady flow of Bitcoin going on exchanges and just being stored there, not really doing anything. And then you started to see the price come down. And as the price came down, Bitcoin actually left the exchanges. Now, that doesn't make sense either, because as I said before, as the price comes down, the balance on exchanges goes up. So this actually tells me that there are some whales that have been significantly manipulating the price. This could be market makers as well. It could be various different people. What you basically saw them load up the exchanges in advance and then potentially bring the price down and then take off Bitcoin from the exchange. Okay, so interesting stuff to really be aware of and what's going on. This is natural. Okay, this is the natural kind of response to a pullback in the market. Lots of green on the exchange. This is unnatural. Okay, so it's good to understand what's actually been going on, what recent trading activity has been occurring, why we've seen so many price targets to the penny on so many different candles across the Binance USDT pair with Bitcoin, that we should be very aware that there's something not quite right and something afoot when it comes to the price action of BTC in the month of December. Okay, some very interesting stuff has occurred. Now, I'm expecting that the new year is going to be incredibly well for Bitcoin, for many of the altcoins as well. But I don't think this is necessarily over just yet. Although we have seen a lot more BTC now leave the exchanges, the price of Bitcoin slightly recovering allows you to see these red bars. So interested to see how this does continue going further forward. Now, guys, I'm going to leave the video there. I do think that we have a really good, strong chance of getting a weekly close candle above the Gaussian channel. So that would be really good, positive news going into the new year as well. Guys, if you have found this video useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, do subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.